This is an Uncovered Japan Company research report on JM Holdings, ticker 3539. JM looks like a grocery retailer on the surface, but its economics are built around a more unusual asset, a meat value chain. It owns from wholesale sourcing and processing through to the shop floor. The starting snapshot is unusual for food retail. The report puts JM at about 10.3 times forward earnings, with a 14.2% return on equity, a roughly 5.4% operating margin, and a 62% equity ratio. Those are strong operating and balance sheet markers for the format. JM's core product is not simply a supermarket shelf. The group buys and wholesales meat, processes meat and prepared foods in-house, and sells through both urban professional stores and family-oriented supermarkets. Nikuno Hanamasa serves restaurant operators and households seeking bulk value, while the roadside and home center formats serve the family shop. The operating history supports the structure. In a Japanese food supermarket market that barely grows in real terms, sales rose from 129.8 billion yen in fiscal 2021 to 186.2 billion yen in fiscal 2025. That is a 9.4% compound annual growth rate. JM has also translated growth into profits. The report estimates a roughly 5.4% operating margin in fiscal 2025 and around 11% operating profit compounding over 5 years. That is above the 3 to 4% range common among conventional supermarkets, although it trails the asset-light franchise model of Kobe Busan. The near-term caution is equally important. Fiscal 2026 showed the difficult arithmetic of a meat-led retailer. Sales continued to rise, but labor, logistics, and imported meat costs pressured profits. The third quarter included negative year-on-year supermarket segment operating profit, making cost pass-through the most important live variable for the story. The balance sheet provides a counterweight to that pressure. JM combines a high return on equity with a 62.1% equity ratio and limited debt. Retained earnings have supported reinvestment in stores and processing, while leaving the group with more room to absorb a softer operating period than a highly leveraged retailer would have. The moat is operational. Vertical integration keeps wholesale and processing economics inside the group, while professional and household demand share the same procurement base. Kanto concentration can also shorten delivery distances under tighter logistics conditions. Founder family ownership, at roughly 43%, supports long-term decisions, though it also contributes to a thinner float and limited minority influence. Management's second midterm plan targets 250 billion yen of revenue and 15 billion yen of operating profit by fiscal 2029. The path relies on store openings, Kansai expansion, and deeper in-house manufacturing and processing. Management did exceed its prior revenue goal, but Kansai starts from limited brand recognition, so execution still needs to be demonstrated. At about 10 times forward earnings, JM trades below the broad retail sector average, but around the food retail peer median. The report's 3-year scenarios range from 1,086 yen in the bear case to 2,512 yen in the bull case, with a 1,766 yen base scenario. These are author estimates, not price targets or recommendations. The investor checklist is straightforward. Watch whether JM can pass through costs without losing value-focused customers, whether new Kansai stores can establish a local base, whether same-store sales remain positive, and whether operating margin can stay above roughly 5%. The September full-year results and guidance are the next major point of evidence. JM Holdings is a differentiated Japanese retailer because it owns the meat chain, serves 2 demand curves, and carries a strong balance sheet. The valuation is not demanding, but the cost cycle and Kansai rollout remain genuine risks. This is research for information and education, not investment advice. For a much deeper look, visit the free deep dives at uncoveredjapan.com. We go beyond the headline numbers to cover the business, financials, valuation, risks, and catalysts. This video is for information and education only. It is not investment advice or a recommendation to buy or sell any security.